Bajaj Finance Limited, a story of climbing higher and higher. Bajaj Finance, the largest NBFC, non-banking lender, Bajaj Housing Finance, subsidiary for mortgage lending, and Bajaj Financial Securities for depository services, broking, and mutual fund distribution, IPOs. Well respected, reputed, and performing exceedingly well. Reach of Bajaj across the country is quite massive, great geographical footprint, locations in excess of 3,500 and distribution points over 1,30,000, leader by far. 7 business segments: consumer, SME, commercial, rural, deposits, payments and partnership and services. Assets under management very strong, closer to 2 lakh crores, growing year on year except during COVID, and 3-year CAGR is impressive 19.4%. Economical funds effectively used. The performance of Bajaj Finance has remained quite impressive. Growth in net income on a continuous basis reaching up to 22,000 crores in the recently concluded year. Similarly growing NPAT except for the period of COVID. Net interest income percentage reaching up to 64 is really a reflection of the effectiveness of utilization of funds, and NPAT percentage has reached up to 40, just slightly behind 41.1, the highest so far. NPA both gross and net under control. Net income a CAGR of almost 29%. Similarly, NPAT has also grown during the period with a CAGR of 30.8%. 30% CAGR for a company of Bajaj size is really creditable and speaks of the effectiveness and business leadership. A look at the various segments of Bajaj as the most diversified NBFC with a wide range of product offerings under various segments. Between the period March 2018 and March 2022, there has been a churn with reduction in sales finance and increase at the same time in consumer B2C, and there is a noticeable fall in the contribution from securities lending, but the major shift that we observe in respect of Bajaj Finance is the greater focus that is given by the company on the mortgages. 31.2% of the total assets under management forming the core of Bajaj Finance under the mortgages section, and that talks of the focus as well as the profitability contributor. I am Vittal Prabhu with the weekly video on Stock Learning Simplified. Hope you will find the video useful and effective. Bajaj Finance stands out with its PE of almost 48 times. It's a non-banking financial company with a strategy and structure of a bank into lending and also into mortgages, similar to HDFC and HDFC Bank. But its business transformation has been quite fast, active, responsive, and it has strengthened its technology, getting into more digital supremacy over competitors, and its credibility is impeccable, and its credit rating for borrowings and deposits quite impressive. But the talk is about the gap between Bajaj Finance versus other lenders, including banks, and the gap is widening, and this is being questioned in the background of recent performance of Bajaj Finance, which is not fully into the expectations of the market, and that is posing a challenge to the company to retain its market position and market price. It has been a one-way story for Bajaj Finance, moving from 1767 of March 18 continuously upwards, but notably on the strength of its strong performance year on year. And that has taken it to the level of 7,000 plus category. But now In the background of changed circumstances, the same valuation is being challenged by a section of analysts with data to support from their end. The rich valuation of Bajaj Finance is being contested by the leading global research and broking house CLSA, which has highlighted figures on fall in customer acquisition, deposit book and liquidity levels right from December 16, 2021. It has been consistent. It took it forward in January 20, 2022, and early April it stuck to its guns, and after the results of Bajaj Finance were announced on April 26th, the CLSA marked it for a sell. This consistent campaign against Bajaj Finance based on figures from its performance has its impact in the course of geopolitically caused market meltdown in the last week of April. Bajaj Finance literally crumbled under the pressure of the brokerage houses and also the geopolitical pressures causing the market movements, and in the process it had a massive correction, falling by almost a quarter, taking it closer to its 52-week low of May 2021, and it was a shocker. In the course of the crash of Bajaj share prices, the hypothesis that got reaffirmed was, in a rising interest rate environment, it is the high PE stocks that fall the most. Evidently, Bajaj Finance crashed more than 25%, while the rest of the constituents of the financial market didn't have so much of an erosion. The message from the daily chart is loud and clear. Price is moving, and it is moving independent of all averages, short, medium and long term. That suggests, notwithstanding the small recovery and resistance signs, the indicators are pointing towards persistence of bearishness. Price action data is also pointing towards continuation of the current falling trend of prices, as the trading quantity over 55 days averaging to 14,32,000 is found to move up in the course of the period to 21,05,000. At the same time, the price, which averaged 6681, has moved downwards, taking it to the level of 5642, and this suggests support of quantity for the crash of price. Hope you found this video on the NBFC giant Bajaj Finance Limited to your expectations. You can access similar videos at our info card, Stock Learning Simplified. We look forward to your likes, shares and comments. If you are new to the channel, may please subscribe and press the bell icon for timely intimation on our forthcoming videos. Thank you so much for your time, great support and interest. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.